Right, so today we'll be looking at XRP USD, and as we can see, we are back on our forever lovely 0.75 section. We have been basing ourselves off of previous daily volatility range means over here, which also so happened to line up with like one band out with regards to our volatility levels, and so on later on. Market memory, if you remember, in the first video that I may have discussed. So what happened here on the hourly, we can see, okay, well, it's just easier to see on the hourly, from the 11th to the 13th in the last quarter of the day. So from the 10th to the 13th, we could see that we went from our daily volatility range, which is very tight, which means we will start to get trendy, to our monthly volatility range. As you can see, we didn't close and hold inside this monthly volatility range, but we did come back and we tested it. Just to show you, so we have the same scenario here. This is a daily volatility range that we're looking at here. We can see that the market came back to fetch it. In how many days? That looks like about 8 days. So what happens here? We also have the same daily volatility range, which is lining up with a monthly volatility mean. So the yellow ones are the center points of the ranges. Okay, this is like a plus sign, you could say. The daily one is a line. So you can see that there's market memory here. What happens? We had a daily volatility range here. We come up and we're going to come and test again market memory. So we can go and we can keep on playing this the whole time. If we know that there was bias support here and we go through the roof, why wouldn't we come back and check if there's still bias support there? Okay, so this is a similar rule that applies. What we have overlaid on here is a 4-hour reverse wave trend, which is a little bit extra. I really enjoy this. So what we can be using this for is just looking for like a trend reversals. So for like our hourly range, okay, so what are we looking for here? If you're looking for a bearish scenario, you're pretty good. If we just close weeklies below this, I reckon we just keep on grinding out this area. If we start closing weeklies above this level, 82 cents, then I think we could be looking at a few targets. Very, this is one of our higher targets at $1, but that's for later on. That's if and when we get there. Let's rather just say when. So we have a breakdown here of we're getting hung up in a weekly volatility range. Okay, so our weekly volatility range are dictated by our circles. Are dictated by our circles. So this is our mean for our volatility range. So we've come out of a very wide daily second band move on our volatility range to come and meet our mean on our weekly volatility range. So to confuse a lot of other people and not let either the bulls win or the bears win, it would be quite ironic if we hang around in here for a bit. We'll obviously start zooming up onto higher time frames, but we're just going to do the 1 hour for now, because it's quite nice just to show you how relevant data points are. Okay, so we're done with our 1 hour. Here's our reverse wave trend mean. So as I was saying before in our previous streams, I know that I'm on the wrong side of the trade. If this is green and I'm short, I better make sure I have a point to manage risk off of and be willing to take these percentage losses, maybe for a higher time frame bear div or bull div to play out. But the general idea being is this is what we're sort of attracted to, is this area, and we start to get quite, how would you say it, like hydrophobic in a zone like this. It maybe doesn't necessarily want to hang around here for too long. It wants to be quite erratic and just shoot maybe 1 or 2% off of it. in either direction. Okay, so that's what we're sort of crossing through. So this is our 4 hour. So now we're going to go play around on like a higher time frame so that we can see what our other indicators are telling us. Okay. So this is 24 hours. This is still a 4 hour reverse wave trend. So it's going to be quite small, and I think secret settings. Are you guys ready? So 4 hour, yeah. So let's go play with this guy on a 1 day and see what our reverse wave trend levels are like. We'll turn off our VRE, throw it up. Okay. So as I said, we were targeting our higher side for like the bulls can really put in a little higher run to the top side for the dollar move if we're sitting here. So I would say that would be a charge for now. Obviously, it being below our one of our previous higher highs over here, it would be a good place to slap on another short if you were looking in bearish terms. But to get a range like this, let's see what our indicators have to say. We're contracting. Okay, cool. So just for a little bit more lining up, what we can see here on the daily is if we close our next daily above the blue line, it will help us defend our bullish mean reversion that's happening here. Volatility did get really low here. I like to a lot of people like to use Fibonacci's and all of this, and like try to identify points in the market. I think points in which volatility zeros is a good place to start. And then it's what time frame you have it on, and then you can decide a whole bunch of other factors to figure out that specific point in which you would like a bearish or bullish Fibonacci if you want to trade T8. But you need the math maybe in order to have statistical value to pull this value out of nowhere. Like this is sort of what we're doing here. So every time we zero up, I like to figure out which candle we sort of want to get hydrophobic from. Okay, and it's usually my candle bodies that I'll be looking for, not the wicks. I don't really mind the wicks for this pure observation. Okay, so we want to start closing above, let's say 75.28 on the 24 hour. Okay, our next daily. Even this one doesn't look too safe because we can still cut it down below the blue line, which is still 75 cents. So this is sort of another reason, just on a little higher time frame. Like we're in a very tetchy spot here. So we are looking to expand. I like to trade this when the flashes are off. We should have some drift coming through here. Okay, let's go throw up our VRE levels and see where specific ranges are. Okay, so this is earmarked as dailies. Okay, so we've come up from a daily range. We're coming to hit a daily range, a second band volatility daily range up into our mean. So you can imagine if we closing candles below this mean, you will have the opportunity for like a bear div to set in on something like this, or a normal div to set in low or high if we start closing here. And it can try and push all the way through, but this starts to get exhausted, and then you just wait for these puppies to mean revert, and you will have your little pump bear flash. So I hope this was helpful with regards just to our current levels, why we sort of want to be holding up the 75 region here. We can drop it into a little bit of low time frame. So here would be a very nice play. We've come in, we've hit a daily and a weekly volatility range. All not too tight yet. I know it's only out by like 3 decimal places over 1. 3 decimal places 1. But like I'm not happy with that. I like it to get real close and personal. So what I would be expecting here is we have an outlier event, so this is going to be like an obvious short, you could say, but we don't really know how long it's going to want to push down, and we know that XRP likes to short through. So we're going to get our first big bump in how long to this close? In 5 minutes. So we're going to get our first bump to chase the downside. The bulls, you would have places like this to manage your risk on, or enter your trades. So these are your levels that you can maybe get denied in. How it looks doesn't really matter, but coming in, we're closing bodies here, and then we start trying to see if we can push back up to break our previous current high. And if that happens, this will pretty much be, let's move that over. This will pretty much look like something like this, but just in different color, and bounce somewhere here. And that will be signified, either this bounce will line up here, depending on if volatility is going to carry on expanding with it to the downside. Looks like our first unsmooth one is starting to cool off. We haven't got any correlation for our first one yet, as this is still going sideways. So as soon as these guys start to tick together, we should have a new direction, or at least see for continuation. So that's what we'll be looking at on a 45-minute. And from there, I think that would be a good place to leave it off. We will be defending, pretty much trying to keep it in this range. If we can keep it here, in this range, your high time frame, mean reversion should start to look a little bit more sexy. And that's what you're sort of hoping for if you are a bull. If you are a bear, you obviously want to keep it there and fade it out. So you can, it'd be a good place to fade it out, and it's a good place for bulls to hold and bears to fade out. So a good little fighting zone here. I hope that was helpful. And yeah, so we've got some low volatility. We're looking for it to expand. Our unsmooth ones expand on the daily. We will be looking for a little bit more correlation over here with regards to historical data. And yeah, I hope you have a good day. And our flashes tell us just through percentage returns amongst MAs, variance, you could say, we're done fighting for the downside for now. We're going to start making some red flashes. Red flashes means most of our variance and percentage moves are to the upside. Okay, so this is a place for float. I hope you have a good day. And yeah, there's a little final look. We're contracting. Our 10-minute is looking for its outlier event to the upside. Contracting, we're looking for a little bit of mean reversion here. Correlated, so we're looking to expand. And that's our 10-minute for you guys. And I think the 10-minute has this range to defend for mean reversion. It has this range to defend for mean reversion. And have a good day. Warlord out.